Now our second speaker, Mr. Dale Hall, he will bring us to the InsurTech space, talking about trends and opportunities for the actuarial communities. Dale is the Managing Director of Research for Society of Actuaries Research Institute. Dale coordinates the SOA Strategy Research Partnership, oversees SOA experience study coordination research across the SOA's actuarial practice areas and markets, and directs the SOA data-driven in-house research initiative. He's also a frequent speaker at insurance and retirement industries meetings to highlight SOA research and host the SOA Research Insight podcast. Dale? Passing to you. Okay, we can't hear you. Dale? Okay, we'll try.
Let me flip to this. You can hear okay?
Yeah, now it's fine.
Okay. Yeah, sorry, just made sure I had the right microphone on there. Well, it's good to see you. Thanks, Robin, for the great introduction, and great to have this opportunity to present to the Singapore Actuarial Society. Big thanks goes out, of course, to all the sponsors that you see behind me for sponsoring the conference. And it's been really a great effort to work with all the volunteers that you heard pull together and come together to make all this happen. I'm presenting to you from Chicago, Illinois. It's about 8:30 in the evening here compared to your morning on Monday, but looking forward to giving an overview on some of the things that we're doing on InsurTech and research, and really the new opportunities, the great and growing opportunities, I think, for the actuarial profession in this topic. And then we'll try to leave a little bit of time for some question and answer prior to the break that is coming up at the top of the hour. So let me move forward here. You know, technology is clearly in the world all around us. It's a big part of what we do every day. It's even in our insurance world, it has become more the norm than anything. And technology, you know, where 15, 20 years ago, we would automate things and do big calculations to make them happen. But today, it's almost, it is the stakes to get in the game. It's more than just convenience. Our companies are thriving on more use of technology. Our customers are expecting more use of automation and technology. And the way we interact, not only within our own insurance company, but with our customers is clearly based on technology. Just a couple stats that we pulled together here. You know, I have to admit that I am very tied to my smartphone here. It is a huge and growing market. Again, you know, all around the world, it's becoming, you know, more than just convenience. It's becoming really the way to interact, to collect information, and to do business. And while we think it's even big today, we note that the global smartphone market is really estimated to keep on growing. Nearly all around the world, in a US dollar measure, about 800 billion still in 5 or 6 years down the road. And so even though we've seen this tremendous growth, it's still going to be growing at 8 or 10% annual growth rate as population dynamics around the world change. Not only that, but what we know and about today about mobile payments, you know, we're starting to get a little bit more accustomed in many markets. You know, your local market in Singapore is probably even well ahead where the North American markets are on using mobile payments. And because of that, you know, connecting credit cards and bank accounts and investments and other things straight to smartphones and computers, the global mobile payment market is really estimated to grow even at a faster rate to nearly US 12 trillion, that's with a T, in just about 6 years down the road. And so starting from a smaller base, but quickly ramping up over the next 6 years at a 30% annual growth rate. And when you layer onto that, not only, you know, the use of smartphones, mobile payments, and the way we all connect with each other across different applications, you add on to that the growing set of data that comes into actuarial work in the insurance and pension and other worlds where actuaries practice, plus layering on all the predictive analytics and tools that we can use, R and Python and big databases, and even visualization through things like Tableau and other tools. That type of data and analytics is really going to get even further. And it has really started to ramp up highly in the last 3 or 4 years on this concept called InsurTech, this marriage between insurance historically and what has been growing in technology. And you heard from YE on the broader things that are happening in Singapore, not across insurance companies, but also into banks and financial services. And so InsurTech, FinTech, all those types of words certainly becoming much more part of our vocabulary. Let me give you, this example of how it's being applied to insurance, because it's a little bit different than just insurers making a recognition of technology having to come to play. The insurance world almost has this disruption that is evolving. And one of the analogies I like to use, and we actually used it in one of the papers that I'll point to here in a few minutes, is if you were to play the game in North America, we call it checkers. I think there's a Malaysian, Singapore version of checkers or drafts. And if you sat down and were teaching someone how to play this game and the strategy to win at this game, what would the steps you would take? I remember when my daughter was about 3 or 4 years old, she really wanted to learn how to play checkers. She had seen us playing it. She was to the point where she wanted to participate in the game. And I said, that's great. Let's sit down. Let's put the drafts on the table. Let's neatly put all the small little round pieces within the squares and line them up just right. And I said to her, the goal of this game is really to get all my pieces. If we're playing against each other, the goal is to get my pieces off the checkerboard. And immediately, without even thinking about it, she started reaching across the table, grabbing my checkers and just throwing them left and right around the room to literally get them off the board. I said, that's very innovative. That's a great way to think about it. There are a few rules that we might need to enable here, but she was thinking without really knowing quickly what the rules to this game were, and maybe that was of a benefit. So we reset the table, put it down, put all the squares, all the circles within the squares again. And I said, no, really the goal here is for you to use your checkers or drafts to get my checkers or drafts off the table. And without thinking about it immediately, she started like pushing her checkers forward, a little miniature army or a snowplow, pressing against her checkers against my checkers. They began falling into my lap. And ultimately, all my checkers were off the board using her checkers. And I think it kind of lets us think about, well, there are rules to this game. There is an ability for innovation, but at what point in any of these situations do the rules fit into this discussion? Do you start way back and say, I'm going to teach you all the rules first before we talk about the objective? Or is it better just to kind of know what the goal or objective is and try to figure out what's the best way to accomplish that? So I think in many times we as actuaries are caught thinking we prefer almost to know what the rules are instead of just thinking innovatively and say, how can we solve this issue? Or our tendency is to kind of want to know what the rules of the game might be. I think InsurTech is probably coming at this from a different angle. It's just saying, look, there's a whole bunch of things going on in the insurance world here. It's pricing, it's rating, it's the way we engage with customers, it's the way we distribute products, it's the customer experience, that we have with our consumers. It may also be the way we do valuation and capital management. But sometimes it's almost better to kind of not know what all the rules are supposed to be in order to spur innovation. And I think that's what's starting to happen in a couple of places. More from the technology side, they're saying, look, the customer experience is just not optimal. There's better ways to approach it. Let's just try to solve the customer experience. And then, yes, eventually we'll put some structure and some rules around it. We have to play within the supervisory rules of the monetary authority for sure, but helping us brainstorm a little bit at first about, how can we just make the whole situation better? And so I think that's what we're seeing today in the application of insurance. How is technology applying to the way new insurance processes and products are playing out? You're starting to see a wide variety of startup concepts and ideas and innovations. It might be a new product. It might be a new way to distribute the products that we sell. It might be even a brand new way to engage with our customers or with our distributors bigger than ever before. And I would say that venture capital is looking to fill that space. A lot of the focus now is on raising funds to go vet an idea, build an idea, and then eventually grow a really small company into something that can provide new services, new products, new customer engagement, new customer experience. But I'll also say we've seen over the last 12 to 18 months that many insurers are just saying, look, we have to be our own venture capitalists. We have to put aside some capital, some equity within our own insurance balance sheet, and we'll create an investment fund that will go out and search and think and create and incubate new ideas within our company. Almost a little bit of diversification of thought. If our products were over here, well, how can we think about new products that we might want to offer? If our distribution's over here, what are new ways that we can distribute those products? And we'll invest in ideas. Maybe not all of them will be successes, but we'll have a handful of them that will come together and grow and flourish into new ways that we can work as the insurance industry. And again, it's not just on a certain place across the whole value chain. Where are we making those handoffs to different parts of our insurance company? It could be the way we distribute products. It can be new products that we're offering, reacting to what the needs of consumers are. It can be in the way we underwrite. We've seen automated underwriting, accelerated underwriting using predictive analytics certainly grow in the way we bring on new risks. It could be in the way we adjudicate claims, whether that's life or health or property or auto, motor insurance, credit insurance, risks, critical illness, things like that, where the way we adjudicate claims is becoming much faster, more technology. And it's even just the internal process efficiency, the way that we administer policies, the way that we pay out benefits. All those are really being impacted by today's technology. And InsurTech is certainly a part of that. It's really a strong importance in local markets. And at the SOA, and even at some of the local actuarial organizations, you're starting to see more and more professional development, more and more education to actuaries on, hey, this is a great opportunity. It's meshing together things that we're already good at. We're good at the data side. We tend to be really good at the technology side. So how can we be part of this growing wave that is coming and being realized today in order to make that much of a difference in what's happening within our company and within our market? So this growing transition for insurance companies to focus heavily on technology in recent years. We are seeing, at times, some external disruption. There's new carriers, there's new partners, there's new technologies that are coming up that are maybe small to begin with, but we run the risk in the traditional historical insurance company sense of having them disrupt and take away some market share. We are seeing more of this internal investment in venture capital, especially by larger traditional both insurers and reinsurers in your local markets. And so at the SOA, we said, look, this is something that we really need to provide more information on, provide an update on what's going on in current events in these markets. Let's do more research into what's happening here, publish papers that the actual profession can use and digest. Let's do more on professional development and networking. And if you go to this section that are listed here on the bottom of the slide, this SOA.org/programs/InsurTech. In fact, I think if you even just do SOA.org/InsurTech, you'll go to a portion of our website that is very much dedicated to this. We've created a partnership with a local incubator that's based in Silicon Valley in the US, but really has offices all around the world, including a big local market there in Singapore, that we can bounce ideas off of. We can kind of see what some of the growing trends are when it comes to new InsurTech ideas, and sort of put our ear to the rail and pass on to you, the members, working every day in the actual profession, about new things that are happening, sharing ideas, doing a lot of back and forth and brainstorming on how actuaries can be a big part of it. I have to give big kudos to Wai Yi and the rest of the team at the Monetary Authority of Singapore. As she noted in her presentation just a little while ago, they really have adopted a growing idea of, let's create this sandbox, and it's evolved to Sandbox Plus coming up in 2022, this framework that allows new ideas to be incubated and tried out, and if successful, can be brought to market a little bit faster by coordinating with the regulator. I think they're trying to make sure that all the rules are kind of still thought of, but if there are opportunities to bring new products or new ideas that may not be ingrained in the historical supervision or regulation of the Singapore market, let's enable them to get to consumers if there's going to be demand for them in a shorter, faster, streamlined way. In addition, some of the Sandbox Plus ideas are to add on things like potential grants and others to help spur more innovation, to help fund that, and to make sure that those products are getting to market. There is really an opportunity for broader distribution of products and services. And I want to point you to this research report. I'm just going to highlight one or two things from it. But around August, September, so just about 2 or 3 months ago, we went out and surveyed our membership on what's going on internationally on InsurTech, what type of growth are we seeing, even doing a little bit of a look forward into 2022. Where are venture capital markets going to focus on the biggest? Where is there going to be the most opportunity? Where do you see regulators fitting in to the process for mixing together insurance companies and technology? And the result was this link that I've posted here. It's about a nice little 10-page report that goes through about 10 or 11 different questions that we asked to members like you, thinking through what type of what the future might hold for InsurTech and venture capital. I will note that the Asia Pacific markets are definitely leading the pace here on being the most flexible. So not only MAS, but others in the Asia Pacific markets are really seen around the world as being the most flexible. We asked all the survey participants to respond, how much flexibility or challenge do you see having working with regulators? And these don't sum to 100% because some answers might have been in the middle, or people chose not to answer. But by far, the Asia Pacific markets, half of the responses were listed as flexible or very flexible. Only less than 20% noted the Asia Pacific markets were challenging. I think that's representative of what we've seen from the Monetary Authority of Singapore. You go down this list though, and here in North America and even further in Europe, the markets that have had an insurance establishment for hundreds of years, and maybe that's almost to the detriment. We've written so many rules and so many regulations, that so many barriers that insurers have to get over to bring a product or distribution or ideas to the market, that we're not seen as flexible as some of the Asia Pacific, Middle East, Africa, or Latin American markets. Almost 2/3 almost of our respondents thought the North American and European markets were either very challenging or challenging. And so there's maybe a lesson that can be learned from what's happening in some of the local markets like Singapore. And I think insurance regulators are trying to find desperately ways to flex to this new environment. I'll point out here then a couple reports that we can walk through, and then we'll get to some Q&A. There is a lot of importance in some of the local markets, especially in the Asia Pacific markets and even Singapore, in using technology and some micro insurance. We issued a report that was authored by Milliman that looked at a literature review on where around the world are there these emerging technologies, mainly in worldwide microinsurance markets, that the combination of technology, insurance are allowing more microinsurance products to be sold. And microinsurance products have the benefit of maybe getting to a wider distribution of socioeconomic consumers, or they have the ability to sell things in smaller pieces. So it may be a crop insurance policy, or it may be a very small personal business policy. And instead of needing millions of dollars in order to have coverage, it can be done on a very small level. And technology is a big part of that. I mean, even the smartphone in those cases can be the way that premium is collected, the way that products are distributed, the way that claims can be settled by taking pictures, things like that, and validating claims. And it almost happens in a very technology-focused environment. So some of the local market examples are listed on the bottom of the slide: weather-based insurance indexes, where you can measure, with satellites down to a very, very finite level as to what's happening with property damage or flood. The use of cameras on smartphones and video on smartphones can really help in reducing fraud in motor insurance. What happened at the site of an accident? Oftentimes, you may just have a report, from an authority as to what was happening, but when you can immediately start taking pictures and recording the scene and what's happened, I think it reduces fraud quite a bit. And then that digital analysis and machine learning, taking pictures, and maybe it's the picture of a property roof, or maybe it's a picture of a fender that was damaged in an accident. And digital analysis can quickly say, well, I knew what it looked like beforehand. I can now assess what it looks like now, and I can use a lot of machine learning or artificial intelligence to help in the claims adjudication. InsurTech is, helping us give a deeper background and understanding as well. A really good paper that I want to point you to, sponsored by our SOA Research Institute, on a guide for the actuarial community. This is really designed to be not only a good starting point, but gets really deep into the ways that actuaries are getting further involved with InsurTech in markets all around the world. It shows a lot of ways where the actual profession is capitalizing on this wave, either as thought leadership, maybe even starting new companies, or being involved in this venture capital inside or outside of insurance companies, and the backgrounds that we as actuaries have that can help facilitate that. I really think in this report, one of the key takeaways is to inspire actuaries like you on the call here today to be this bridge between technology and traditional insurance. You're all fairly educated on what's going on and the rules and regulations of traditional insurance. You also bring the data and technology side, and you can be that conduit between the two that helps explain. Plus, when you add data science to the mix, the analysis on predictive analytics and data science tools that can help formulate new connections, make predictive analytics predictions as to what's going to happen in the future, and help that create some new strategies as well. And a variety of things that are covered in this report that give some examples of what's happening. Obviously, we talked about machine learning. We're talking about the Internet of Things, which is growing, I know for sure, in your market just as big as it is in North America. These are little small connections of internet connected devices. In my household, it might be things like my refrigerator, which is tracking, or I even have in my basement or near my washing machine or near my sump pump these little indicators that will show if there's moisture, and so it helps prevent quickly damage from occurring if rain were to get in, or if there was a leak in the plumbing and all of a sudden water starts collecting. This feedback loop back and forth, between the insurer and the policyholder, and collecting information all the time for better use in pricing and better use in loss analysis. Telematics, obviously, in motor insurance and auto insurance is becoming more of the core of the day, much more able to charge people based upon the risks that they bring. And for the life and health side, wearables. I have my little watch on here that's telling me all these amazing things, like what my heartbeats per minute are, or how much exercise I've gotten through the day. And so that type of information being turned into opportunities through InsurTech to do either underwriting or understand, almost doing some in-force underwriting, I guess, of risks at times, or helping me, incent my behaviors so that my health can be strong and I can be monitored as to, what types of risks that I might be. I'll note that, this is a growing trend to see much more opportunities for not only actuaries, but the whole insurance world to learn about the different trends and opportunities. We at the Society of Actuaries were one of the marketing sponsors of an event called InsurTech Connect in October. So just about a month ago, we were there. And I will try to put the link to this, but there was a report that we wrote. You can find it just by going to the SOA website, clicking on the Research Institute, and then onto our Innovation and Technology section, where you'll see this wide variety of reports. But we did a lot of interviewing. We talked to probably hundreds of people at this InsurTech Connect conference. And it gave us a better background and some key findings that we were able to turn into a report very quickly, so you could get a view of all that's going on in the most current setting for this industry. There were speakers doing presentations, not only small little pitches as to how their company can be beneficial, but a lot of it was from people who follow this type of stuff quickly. They're either venture capitalists or they're rating agencies who are tracking what's going on. So this report that we issued gives a lot of background and key findings. I think one of the things that was noted early on in the program too was just how much traditional insurers need to realize, that technology is a wave that they need to be aware of. I mean, if you walk back over the last 10 or 15 years, in reality, while there's certainly been a lot of catastrophic events and things like climate risk and others have had some impact, but there really has not been a huge, large-scale failure of many insurance industry or even big companies since we had the economic crisis around the world in that 2008, 2009 timeframe. And you layer onto that, the last 10 or 15 years have been relatively calm in international risk events. Yes, there have been some local market events, but not where it's bringing a whole lot of capital at risk or trillions of dollars in payments. And I would say the insurance industry is probably a little slower to react than some other industries. We've seen competition in other industries ramp up. I mean, around the world, places or technology companies like Uber or Lyft or any other transportation companies have really started to disrupt what was happening historically in the taxi cab business. And places like Airbnb or Vrbo have said, look, we don't even need to invest in all these hotel properties to have a lot of success in providing travel and housing and locations for people to spend the night, even for business. But in the insurance industry, there's been some reduction in unit expenses, but it's been relatively low and not as much competition or disruption compared to other industries. So when you piece these things together, you may have gotten to a point where traditional insurers were kind of comfortable, but it does provide then this opportunity for disruption and new companies start to come in and say, hey, we can do unit expenses and selling insurance that are a third lower than what it is for this big traditional insurer. We don't have this huge brick and mortar building that is part of that expense structure. So we can pass some of those savings right on to the consumer. And so the report that we published coming out of this conference was really some key trends and opportunities for the profession. What are things that we're seeing? What are the things that we're hearing? Where can actuaries be involved? A couple of them stand out: embedded insurance. And this is kind of where insurance products are sort of embedded into other things that are sold. It might be things like travel insurance that's built into the price of an airline or train ticket. It might be some sort of health benefit that's built into another product that you're purchasing. I would say you're also looking to do more embedded sales opportunities, going to where we're purchasing other things as consumers. So if I'm a large user of Amazon here in the US market, all of a sudden I might start seeing insurance opportunities coming right onto that site, even though I'm shopping for a new computer, a new laptop, or something else. So definitely a little bit different. And again, competitive pressures coming in from new players. Things like, well, if I am looking to redecorate my home and I go to a certain website all the time to generate ideas, well, they know that I'm a homeowner, and you start to see offerings start to come. Well, why wouldn't you just maybe contemplate purchasing insurance through that type of venue if that's a website that you're going to be routinely going to? So again, I think actuaries, as we talk to everyone at this meeting, they can be the conduit for combining data with insurance opportunities. I will note that the Asian version of this conference is coming up in June 2022. So I encourage you to take a look at that. We'll probably have some sort of interaction with membership and the conference there to drive even further. And maybe the last thing we'll note here is we have a good way for you to at least kind of keep in tune with things that are going on. We have a specific podcast called Get Plugged In that focuses on all things that are the intersection of InsurTech and the actuarial profession. So we interview companies that are growing in this space, interview people who are into venture capital and within the insurance companies. You can see the link there. And also just through our normal Research Insights podcast, periodically we'll focus a lot more on technology and innovation reports. So all you simply need to do is search for Research Insights using whatever your favorite podcast player is, and it'll pop up, and you can subscribe to that. Probably issue new information on that every 2 to 3 weeks. So with that, in order to kind of get us back on time, I am going to flip it back. Here you have on this screen some final information if you'd like to check us out on Twitter or LinkedIn. And maybe importantly too, at the bottom of the screen, you'll see that soa.org/new research, which is where every 2 weeks or so we publish a big list of all that has been happening and the new projects that have come out. So with that, I'm going to kind of check into the Q&A here and see what we have. And Robin, I guess maybe turn it back to you to see if there are anything else from your point of view that we can check in on.
Hi. Thanks, Dale, for the presentation. I think we just wait a few quick seconds for the questions to come in. So if you guys have any questions, please feel free to post it on the Q&A board. If you guys have any questions in terms of the podcast or all the things that's coming out from the research from SOA. Yeah, I would say, Robin, one thing that the audience may be interested in too, which is kind of analogous to InsurTech, is this thing called decentralized finance, or DeFi is probably the acronym being used, where it's becoming more and more enabled for you and I to maybe have our own risk transfer transaction between us individually, and we potentially could sort of bypass what happens with the big traditional brick and mortar insurer. So with blockchain, with more individual connections enabled, that's another thing where we're doing some more research on and would want to get out to the whole profession to say, be aware, maybe there's some opportunities, but it also can be another one of these disruptors in decentralized finance. Yeah, definitely. I think with also Facebook renaming themselves into Meta, so could we have one piece into the metaverse as well? Since we are talking about the blockchains and crypto now, right? So eventually, maybe everything is decentralized, and we don't really need a big, the traditional insurance company anymore. Yeah, I think it's a challenge for supervisors and regulators of the industry to try to make sure consumers are not being taken raked over the coals essentially by these small transactions, but consumers are really starting to demand these types of risk transfers, and so it'd be interesting to see where we get 5 or 10 years from now with decentralized finance. Yeah. Eventually, maybe we'll be all paying our premium using Bitcoin. Possibly, yeah. More and more. I think I'm now aware of 1 or 2 insurers here in the U.S. where that's one of their payment options.
we thought forever that we'd be either cash or check, and then credit cards came along, and then you know, online payment systems came along, and maybe Bitcoin is the next in the progression there to be able to accept it as a form of payment.
Yeah, that's true. I'm really look forward for that future. Okay, thank you, Dale. Thank you for the awesome presentations.